The ASX biggest stocks just woke up and the implications are massive for your portfolio. We break it all down plus highlight which of the biggest stocks on our market are gearing up for the next big run up. With insight from our government accredited share trading education that has our experts regularly called upon by major media Australia-wide. I'm Dale Gillam, joined by senior analysts Janine Cox and Philip Tortevsky. And together, we are Wealth Within. Good evening, team. How are we?
Fantastic. I'm looking forward to some fun tonight.
Mate, I am all revved up, so you better watch out, Janine. You don't need to watch out too much, Phil.
Look, the squad's back. There's 3 in here, so it's good.
You know what I love about times like this is when everybody's looking the other way, I start making money. I'm getting so excited. There's so many trades I want to take at the moment. But anyway, before we dive into some amazing stocks, let's look at what just happened to an area of our stock market that has often set the tone for where we are likely to head. Now, I'm going to shed I'll get you to shed the light on that for us, Phil.
Yep, all right. Well, let's dive right in. We've got some charts I want to show. Now, the first one is the All Ords Index, which is on the left. Now, we're looking at a daily time frame just to emphasise what is happening recently, which is a very, very important point. Now, that's the 6th of July. We've seen our market, the All Ords, which covers the top 500, struggle to get through that July high. We're up a few percent from that low on the 8th of July. Have a look at the top 20. This is the top 20 index. In that same time period, we've actually broken through out of this congestion around 5,000, meaning that the top 20 index now is leading the charge, the biggest stocks in our market. And this is where it gets exciting, Dale.
What does that mean? That's why I get excited. Like journalists, when they don't believe me when I start talking about stuff like this. Well, how do you know this stuff?
Yeah, and you know, it's. I mean, you don't need to be a rocket scientist to know if the market's going to move higher. The health of our big players is so important. They often drive the ups and also the down moves. And so just going back to that chart, I wanted to highlight one more thing because I've overlaid in that green line is the All Ords Index. And I just wanted to show throughout history, if we just, and I'll bring it up on the monthly setting because it really paints a picture of what is going on. And when you look through that GFC period, 05, even running into that 06, 07, have a look in terms of the All Ords, the major market overtaking, often signalling, and that's where a lot of the small cap speculation starts to come in play. The big players are lagging and then we get the correction. All through this run from 2011, it was driven by the big end of the town, strong moves up, we get a healthy pullback. We fast forward to the run through in 2021, again dominated by small caps, then we get a lot of no action. Right now, who's dominating the participation? We're seeing the big end of town obviously dominating the market. And as long as that remains, and I know there's a lot of doom and gloom out there right now, but as long as that dynamic remains, it points to a much healthier situation. And that's why right now there's a lot of fear out in the US because their big drivers are their Magnificent Seven and they're actually pulling back. So we're in a bit of a different scenario, which is promising.
Well, Mr. Buffett talks about buying in fear, buying doom. Sell in boom, but what you're showing us there is the opposite, is what people should be doing. And it's, I don't know how many times we put it in a blog or one of our, our articles on our website and our podcast is saying, well, watch those top 20 because when they're outperforming, it's telling you the end of the down move has happened. But when they underperform the overall market, that's when the big bull runs is finished. And people don't look at that. And they really, really don't. So that's why I'm so excited at the moment for where our market's heading. But anyway, there is a lot of doom and gloom, as I was just saying, right now around in the market. Now, consumers and business sentiment is at a lowest levels in decades. And so I want to ask the question, I'm probably going to ask you this one, Janine, is now the time to stay away or be really active in the marketplace?
Right now is the time to be really opportunistic about the market, I think, simply because when there's a lot of distractions around and people are fearful or have become a little bit more fearful, the people in the main, that is not the people in the know, but the people in the main. So when that happens, we know that there are going to be some really good opportunities coming up and it's just about being ready for those. And the market, will have its ups and downs. That's just a reality, but we're in an overall boom market, but we're just in a bit of a lull at the moment. And like Phil said, it's setting up and looking like that the money is coming into those biggest stocks, which is a really good sign.
I mean, I want to ask you both a question. I mean, how many times do we see posts on our YouTube channel, or we see emails coming in from people asking us questions, or we even talk to people who aren't students of ours and they're really doing things backwards, aren't they?
They're the ones that tend to be more fearful of what's going on rather than aware. And I was talking to a lady yesterday who's done very well out of the market after having completed our courses, and she is super excited about what she can see going forward.
Oh, and we all can. And that's the thing, is the difference between those people who are educated and those who are not. Because what I was suggesting is we see so many people at the moment, you know, because of what happened with the federal budget and what they're proposing, you know, we've seen it right across the board, everybody pulling back, not wanting to be in investments. We've seen inquiries about investing and building wealth all go out the door, and people are, and I'm seeing a lot more comments about people, I'm just paying more tax. If you're paying more tax, you're making far more money. I don't, like, I'm happy to walk to the ATO with a bottle of champagne and some flowers saying, thanks very much, I've just made a shed load more money. So, but now's the time, I think, where millionaires are made, basically.
And there's distinctions around it as well. I mean, you know, I don't know how many people are aware of this, but, you know, depending on how you classify yourself in this market, the capital gains tax may or may not apply. And
correct.
We see it all the time. You know, if you do classify as a more active investor, you may be able to bypass all these new restrictions.
Perfect.
And so it doesn't change the opportunity for people that are doing it that way. And I think it's an important distinction because, like you said, dig your head in the sand right now. When it's all quiet and bearish, then when the news starts to pop up and it's all happy days again, you're chasing 20, 30% most of the time. So
people with money, what's the first thing a person with money would do after budget? The first thing in my mind, which is exactly what I did, so I'm talking about myself, I straight away went to our accountant. How do I get around all this shit? And how do I make sure I keep more money? Because I'm going to keep investing as much as I possibly can. And so what I said to him, I said, I'm making your problems bigger. You need to fix mine. So, and again, a lot of people, they turn to turtles and duck their head into their shell and then come back when the sun's shining, and that's when the opportunities are gone. So right now, the opportunities are there for those people who understand what's going on in the marketplace and not just understand it, but know what to do and when to buy and how to manage your trades. So we're going to get into a lot of that tonight, but I think Janine is kicking me under the table because she wants to get into some stocks like she always does.
Yep, stop waffling, let's go. All right, our first one is actually Brambles. Okay, Brambles BXB, we've got a monthly and weekly chart here, and you can see the big drop in Brambles share price recently, but you know, these sort of drops can often signal an opportunity coming, so just watch out for Brambles, because if you think about it, it's just dropped. People who are buying it up here were happy to pay $26 for the shares, but now, well, it fell 40%, which is a good sign. Stocks that often fall that level often signal there's another opportunity not far around the corner, but currently down around 30% at the moment. So, and if we look at where it's come back to, we can see that it's nothing out of the ordinary. I mean, this is basically the heart monitor for Brambles, showing how it basically had a heart attack on the way down, but coming up and down here, you can see a nice steps all the way and then a big acceleration. This is often a sign for bigger stocks that, you know, something is going to be, the money is going to run out, you know, when it does this sort of thing with such a huge rush. And then we saw the truth come out and it just re-stabilised, but it's stabilised at a higher price. It hasn't stayed down here at 16.30. It's holding up nicely. So I would just continue to watch this one, but I think it's probably got a little bit of time before, you know, it depends on whether you're more aggressive or whether you're more conservative, but I'd actually like to see a lot more unfold, but I can see there'll be a huge opportunity coming up for Brambles down the track.
Isn't it exciting, interesting, because you know, you think, okay, we're in this huge bull market, we're at the top of the range or near the all-time high. You shouldn't see this with top 20 stocks. And
correct, that's why I'm so excited.
Right, and like Janine said, these often blow-off moves that are then followed by the big correction on the way down. Once that's done, it generally becomes great trading conditions. We're just potentially at the end of that, which is, I mean, people with super funds, people with, you know, longer term views, whatever it may be, like you might be getting some amazing opportunities that if you listen to things, you would think, well, it's not possible. Everything's at an all-time high, everything's expensive.
And it's not. That's the point. And I was only saying that well, we're going to talk about Cochlear later on. Is what I got a viewer question.
Oh, yeah.
And that one's really interesting. So stay tuned for that one anyway. But to me, that's really exciting. But I was chatting about this sort of stuff with one of the journalists at the Financial Review only the other day. But I'm going to talk to you a bit about that later, what I talked about. But let's get into the next stock, which is
NAB.
NAB. Is it?
All right, so looking at this chart now, I mean, I don't know if you guys remember, NAB or the big banks had some big news come out over the last couple of days or last couple of weeks about how they're being shorted by hedge funds, right? And Pedro and I did a really nice podcast on this. We thought, let's go and explore and see whether or not price is telling us.
Is that last week or?
Probably 2 weeks ago.
2 weeks ago.
And when we looked at most of the banks, they weren't really giving any real serious signals that they were rolling over, except CBA was questionable.
Yeah.
Now it's started to feel some areas that were questionable. So that looks like it's turned the corner. But when you look at NAB, I mean, we just looked at this monthly chart and said, okay, well, let's ask, is price telling us that it's rolling over? And the answer was no. I mean, it really moved back to this beautiful momentum trend that you can find these wonderful techniques in your book, Dale, that I'm sure you're going to show in a second. But, you know, come back to trend beautifully. Healthy pullback, no sign yet that there's a rollover. In fact, we're managing to hold above these pre-2000, I mean, that was the 2007 GFC high. So we're managing to hold above that GFC high right now, which is very positive. And I think on the weekly time frame, what's also interesting with NAB is that we do have, for those short-term traders, a gap through here that generally the market does like to come back and fill. So even at these levels, there's potentially a flow-on opportunity up to that $42 level in the short term. Volume's good. Nothing right now is telling that these banks are rolling over. So interesting. News comes out, they're being shorted by the big funds, panic sets in and they start going up.
Well, how often have we seen that one too, Janine? How many times have we seen their stocks being shorted and it still keeps going up? Because they're not always right, are they?
And other reasons too. I mean, they might just be covering positions, they might just hedging. It's not always a directional play.
Yeah, absolutely.
Well, they might want everybody to think that so that all of a sudden people give up their stocks so they can fill their
put a little bit
positions
on the short side, but put the long side a bit bigger.
Yeah, well, I don't trust anything that they're doing anyway. But one thing I've seen, and I'm going to get you to answer this before you go into the next stock, Janine, I've had a few people I've seen comments saying, you know, the market's really volatile, the big end of town have taken over. How can a small person like me actually profit from the market?
It's not about that at all.
Yeah.
You have all
Totally
the
not
advantage,
about that. As an individual, you can, because you can move in and out of any stock on the market. You don't have to worry about liquidity. It's not like the big players. But I think what more they're concerned about is that the big end of town, when they force the market down, now more than ever, and this has allowed me to get on my soapbox, they have access to more stock to short than what they ever did since the whole Royal Commission into the banking and the releasing of the bank. We had a really tight financial system and a tight broking system that got broken with that decision.
But retail can short too.
Yeah.
So that's my thing.
Short.
You know, we can follow. You know, we can follow on the up and on the way down. And right now, the gap between retail and institutional, with AI and all the the information out there, I think is closing more than ever. Yeah. Like you look at the institutions, they're bound by mandates. They're slow to operate. They have to go through whole committees to get to a decision. You have all the advantages as a retail trader.
Absolutely, totally agree. So Janine, next stock.
Next stock. All right, it is Northern Star. Northern Star, NST, you can see there we've had this massive fall. This is obviously the reaction with the gold price, and the fall was in the order of 50%. Now, that's pretty nice. And you're seeing 37, it's still down 37%, so there's still a possibility to make some good gains out of this as part of the next run. But just look at the beautiful angle of that trend. It's telling you that something is setting up right now. We don't have direction yet, but for those who are savvy and are paying attention to what's going on and not focused on the fear, there will be some really good opportunities when Northern Star takes it up out these highs here. So just watch this space. If there's a fall and it takes out this low, then just leave it and wait for one of Dale's trend lines to fall into place, and it'll make it even easier for you then.
Yeah, I think that's a big point too, because when you do have markets that are about to finish off, you often see a broad market strength generally. right now it's so concentrated out in 7 stocks in the US for their market, and in our market you're seeing so many sectors like healthcare, tech still giving opportunities, gold, miners. Like when you see a market with so much opportunity still, I'm not sure that we're right near the top.
Yeah, I don't think we're near the top at the moment. I think we've got more to run. But anyway, if you are sitting there at home and you're wondering why, you know, whether you should be in the stock market or whether you shouldn't be, or, you know, you're worried about your stocks, then you need to get a copy of my book, How to Beat the Managed Funds by 20%. And guess what? I'm going to give it to you for free. All you need to do is pay the shipping. So head over to our website, wealthwithin.com.au, and go into the store. You'll be able to buy it, or you can click the link below on this YouTube video. But again, it'll teach you how to buy stocks, how to manage your portfolio properly, because right now is a perfect opportunity for you to get the book so that you can make sure you're profiting not just for the rest of this year, but into next year and doing much, much better with your portfolio. But anyway, stick around because we do have some more amazing stocks coming up shortly. But now's the time for Janine to give us her weekly trending topic.
Thank you very much.
You're a trendy girl.
Oh, I'm not going to respond to that. Front of mind for many Australians who borrow to invest or have a mortgage on their home is the threat of higher interest rates, and Westpac have changed its expectation for a rate cut, and are they right? An article on realestate.com states that all of Australia's largest home loan lenders anticipate Aussie households are in line for interest rate relief next year. That's a long way off, and forecasts typically change. Oil prices have again spiked due to the US conflict with Iran, which will force the RBA's hand sooner rather than later. We forecast oil to head to between $100 to $110 a barrel in the near term. If you haven't seen the boys talking about the oil price, make sure you watch our market report. Now, the banks want you to focus on the good news. Despite what Trump says, I don't see the conflict fizzling out quickly. Although I don't agree with Westpac's forecast for the cuts in 2027, they are reportedly the outlier of the big four, predicting the RBA will hike in August, and I do agree with that. The RBA believes the economy is too tight and requires a period of below average growth to get inflation under control. Westpac expects the increase in August to be one of 2 rate increases for the rest of 2026. I believe there's a possibility for 3 increases this half. Sorry to be the bearer of bad news, but that's the reality. There will be relief down the track, though. That's the positive thing. So just keep watching our show and you'll find out more. For now, let's go and have a look at this chart that I've got here, which is the Australian cash rate target. Now, you can see that this level here, and if we go way back, even beyond 1996, around that 5% level is a huge level for the RBA, and they're aiming to be around that level, ideally. But we know that things don't work perfectly like that. You know, there will be spikes above and there will be pullbacks below. But I believe that we're going to be hovering somewhere around this level. We could possibly go into the 5 to 6 range in 2027. So just make sure you plan for that. But if you're an investor, you're not going to be too worried about it if you're finding stocks with 20, 30% upside, are you?
Well, that's the point. I'm just trying to get over whether I'm depressed or I'm excited about
well,
what
I think this is where the stock market really takes over property. You know, this is the point that people have to be aware of.
But that's where also with what's happened with the federal government, it's like, you know, your property with all the things that are happening with that at the moment, getting tenants in your property, managing all the stuff with the tenants, all the obligations you've got there, obviously capital gains tax, interest rates, there's so much negative around property and there's so much opportunity for the stock market. It's not funny. Like, seriously, it's not funny. And people are worried at the moment, but, you know, you've just made me feel like half depressed and half excited. So, but to me, 5 and 6% interest rates from the RBA is normal for me. It's someone my age.
Yeah.
You know, that's just normal. But I do understand first home buyers who've now seen their properties drop in value and they're negative equity at the moment. And so that's a big struggle. And talking with businesses and people in the economy, it's like, why are we getting, the economy is really flat, so why would interest rates be going up? So I understand what people are talking about, but again, when interest rates are rising, the stock market goes this way.
And commodity stocks tend to be the best bet in this climate. And, you know, BHP and Rio, once we see the setup for those, there'll be some really good opportunities there.
Yeah, so the time is now, not once the market's gone bullish, and that's what we keep saying tonight. If you are somebody who's a bit worried about the market and not sure what to do, this is the time where you need to get educated, and I can't keep drilling it in enough. Start reading my books, or start going to our website, start looking at our blogs, listening to Phil and Janine and Pedro's podcast. Don't listen to mine, I waffle too much. But get all the information that you need, because you'll be able to take advantage of it and make a lot of money over the next 1 to 2 years. So really, if you do want the skills to analyse stocks just like you're seeing us do tonight, I implore you to visit our website, wealthwithin.com.au, and have a chat with one of our team members as well. They'll be able to help you understand what your journey is and what you could be doing. But first, let's get back to our topic, and we need to get into some more stocks because Janine's now kicking me under the table again.
And we've got Rio too, which is great.
It's your second favourite stock. You love BHP first.
All right, yeah. Now, Rio had this huge run. I mean, it's a credit to Rio and obviously the board that are managing this company. But you can see that the challenge that Rio had all through here. And remember how people were so doom and gloom on Rio and BHP? And someone said to me recently, I was listening to what you were saying on your podcast about BHP and Rio, and then I didn't take it, and then I saw, the stocks take off. Well, the run's not over yet. So that's the good news. Now we've just got to wait for this setup and look at the angle of that trend that it's come back to, which is beautiful. Now we just need to wait and see the consolidation and be prepared. So like Dale said, a simple thing like a trend line, being able to put a trend line on here and actually see when something's changed. It's just telling you that the changes in sentiment has occurred, regardless of what the rhetoric is being said out in the media. You'll be able to spot it quicker.
Can I talk a bit about that?
Yeah.
Not specifically about Rio, because last Thursday or Friday, I can't remember which day it was, because when you enjoy life like I do, you forget what day it is. But I had an interview with a journalist from the Fin Review who wanted to talk about ETFs. And obviously her editors and people are saying, well, aren't people buying direct shares are going to be paying more capital gains tax than they are on an ETF, and the risk is higher buying shares than an ETF, and all of these things. And she said, Dale, I want your opinion because I know you don't think like that. And to me, the big end of town are pushing this story of going into ETF, and there are record levels of money going into index tracking ETFs. And one thing I said to her, and I think, and it goes on what you said, Phil, is more than half of the money, probably 60% of the money going into ETFs in Australia is going into international ETFs, and the vast majority of that is going into the US market and into those 7 stocks. So if we have an AI meltdown, people are going to be really unhappy with their ETFs. But it's much safer to be in Australia. But what we're saying tonight is you don't need an index ETF. You just need the stocks we're talking about tonight, and you'll outperform any any index tracking ETF over any period of time. And that's what's going to happen. Every time we do the research, these top 20 stocks that we're talking about outperform index tracking ETFs. Pedro and I have done the research.
By a lot.
Quite a lot. And every time we do it in both Australian and US ETFs, the top 10 to top 20 stocks outperform those index tracking ETFs. And you don't need to be Einstein to do it. And you'll be safer, you'll have less risk, and it'll be easier for you. So that's my little rant for today. But I think we need to get into another stock.
That's a nice bit of sharing.
Well, I get journalists all the time ringing me, and their view of the world comes from the big end of town, and that's what I said to her. So I'm not trying to be rude to you at all, but all you get is information from the big end of town who want everybody to be passive and everybody to go into an index tracking ETF so they don't have to work hard to get their money. Whereas it doesn't deliver for people that watch our show. It doesn't. Index tracking ETFs don't deliver, whereas buying the top 10 or top 20 stocks do.
Yeah.
So, Phil, otherwise she'll ask me another question and I'll keep going.
Let's go to the next stock, TCL. Now, this one is quite interesting, especially with what we were speaking about before. You have companies on the ASX that do have pricing power.
They do.
And especially when inflation hits, they can adjust, raise prices. Probably not popular, but hey, it can be done and keep that model going. And I mean, just looking at the share price of Transurban, it really resembles that, a stock that can ride ups and downs. And right now, we're very much like what we saw with Rio over the last 4 or 5 years. A stock not doing too much around these levels, but starting to turn the corner. And this is where things get quite exciting, because when we monitor the way it's been unfolding, we're breaking through long-term momentum, we're testing We're also managing things on the way up. Often getting involved with markets at these points around the onset, the slow grind, which is boring, not much spoken about it, that's often the best risk-reward opportunity that you can get. And I think this stock is giving all the signs right now. If it can hold above these levels, it failed that November 25 high, but if we can get back up there, it looks like July's been pretty good, and take out that November high and hold above there, this thing's going to take out the all-time high and go for a really nice run. And that's what's very exciting, because most of the I guess, hype will start to come in once it's up 40, 50, 70%. Now's the time to look. So I think out of all of them so far, and
well, I'm going to ask you both that.
Yeah,
What's your favourite one out of all of these? But so you like that one? You know, I was just while you're talking, and I was looking at that, and I'm thinking in my head, I'm going to run out of money to put in the stock market in the next month. Like seriously, I'm going to run out of money.
It all comes back to your mindset is always risk and reward. Like, don't you want to get into the opportunities that have the potential to give you the most amount of effort for your money?
Yeah.
You know, it's not just pick 10 random stocks and go, okay, well, whatever I get out of that is okay. Be specific, be concentrated, and find the best risk reward. Because I was chatting to a guy that I was mentoring, and he said, why do you think like this? And I said, well, let's talk about it in a business. Let's say someone wants to start a business, and they say, well, okay, I'm going to be whatever, electrician or plumber or whatnot, but I'm going to do a job, and the job's going to cost me X amount, $10, and the return I may get for that job is $10. If you took only that kind of work, would you be a profitable business?
Yeah.
No. When you look at opportunities and think from well, if it costs you 10 and, you know, and you're making 10, you're not going to make any money on the job. Paying $10.
Oh, sorry. I thought
you're with me?
I thought you're making 10, meaning you're making 10 above your 10.
No. I mean,
okay.
You know, and let's just say it even was 10, right? But then you get involved in, you look at opportunities on the stock market, and this is what we teach. You look from a risk-reward perspective, and you only take the opportunities where you're likely to make $50 for every $10 cost in business. Generally, you're going to be a profitable business, right? And I've probably butchered this whole example, but you get the point of what I'm trying to say. And that often happens when you're looking at these moments on that TCL chart, not, you know,
when it's already printed in the media.
All right, Janine, we've got one more stock to go.
Great point. All right, Westpac.
My analogies aren't too good, are they?
I thought it was fantastic.
We'll work on them later.
Except for the 10 for $10. All right, ready? Now, what I love about Westpac is that, and they say, you know, history doesn't repeat, but patterns do repeat, definitely. And you can see this sort of unfolding on Westpac after the GFC and the consolidation. And we've seen another one after COVID hit and the consolidation where Westpac just wouldn't let go. And now the huge rise that's happened afterwards sort of mirrors what's going on here. Okay, so that means that potentially, if we're looking at, well, what could be the upside for Westpac from here? Well, it's going to be that level plus, you know, so we're talking about possibly a $50 stock, at least for Westpac going forward, which is really exciting. Now, Westpac's done something similar to other stocks, and it's accelerated away beautifully. I mean, this looks like a really bullish growth stock, but it's still following the angle of this beautiful trend that it's created. So, and bear in mind that we're only, if we look at history, we're actually below the level of where it was when the GFC hit.
No, that's
that's
when the Royal Commission.
The Royal Commission hit, you know, and the Royal Commission was more fanfare than anything else. But stocks have recovered to above those levels. And even the GFC, if we go and look at where it was in the GFC back here, which is what I was trying to talk about, but the 50 to 60% was wiped off all stocks around that time. And Rio Tinto, which we looked at before, had 90% wiped off it. If you look at where we're at now relative to that high, well, we really haven't grown the share price much at all. It's only 13 or 14% above that high. It's almost nothing. So that's why we know where we're likely to be headed. Not just that, but the rest of the analysis sets up to show that Westpac's still got further to go. And I like the board of Westpac. So, you know,
and they're making more money now than what they were then. So
not that I don't like their forecasts, but I like their for the
okay, well, how about their forecast?
But I like the forecast for their share price.
All right, now before we're going to move on, your favourite pick of the bunch, Janine,
I'd say Westpac at this point.
in a Westpac. What are you talking about?
Yeah, I like the banks, but I'm going to say TCL. I think, the way it's lining up right now, it's very interesting.
Yeah, I like TCL, but I do like NAB. NAB. But as I said, I'm going to run out of money.
You used to hate NAB. It was like the
I
dog
know, I
of
always
the banks,
hated
wasn't
that.
it?
I didn't tell you, I went to buy stock 2 days ago and I went to look at my normal position size. And I went, wow, I'm going to take up 20% of the daily turnover on this one, so I better pull back on that one. Because turnover's low because everybody's looking the other way, and it's like, all right, time to buy the stock because when they start focusing on it, it'll already be run. But it's interesting when you're trading anyway. But moving on, shortly we're going to get into our hot stock tip, but first let's answer your questions. Now, Dino writes, I found Nexon Limited in January 2026. I bought it in April. I entered in February 2026, but it is a sweet cookie. I'm interested in your thoughts. Will it keep going or is it time to sell? Phil?
All right. We bought it in April, but bought it in Feb?
No, he found it in January, I think. Bought it in
Feb?
April.
Yeah, because I thought he said...
Yeah, he bought it in April.
Okay. All right.
But hang on, he bought it in April and he entered in February.
Unless he's a time traveller, I don't know what's going on there.
Dino, what are we talking about here?
Yeah. All right, well, let's assume both scenarios because it is up. That's the first thing. It's a new stock.
He didn't tell us the price.
Yeah. So I'm assuming April's somewhere around these levels, 18, 19 cents. February's even lower. So he's bought it near the lows. The stock's recently IPO'd, and I know when he sent his email through, he sent a whole thesis on what the company does and why it's...
So you fell asleep?
I'm not so much fell asleep, but I started to question, there's a lot of analysis there that is the what ifs, if this, if that, if it gets funding, if it gets FDA.
I hate the ifs
Oh,
because they give me the yips.
Yeah, it's a hard way to do things. But anyway, going back to the chart right now, where do we think it's going? Well, naturally, it looks like it's going up. It's had the correction from the initial IPO, found a nice base. I like that. It's in trend. You're in at a good price. So now the moment, which is the moment for all traders, is how do I sell? Sell well, where do I sell? And I think the biggest thing is if you haven't put some structure around that, that's dangerous, especially when you're trading stocks like this, because they can fall out of bed in any second. And it's broken through to the all-time high now, to a new all-time high and reverse from there. So it'd be interesting how you navigate this from the point of view of taking as much profit off the table, but not doing it in a way where you destroy further upside. And there are strategies around that, but
But we see this a lot, don't we, with people? Because while the stock's going up, you've got no risk, Dino. It's simple. So nobody ever rings me when the stock's going up. They generally ring me when it's going down and going, Dale, what do I do? And the same with Phil and Janine. And so that's what Phil's saying. You have to have an exit strategy on it because that will protect your capital, because while it's going up, you've got less and less and less and less risk because you're in more and more and more profit. And as long as you have a good exit strategy, then you're fine. As long as you're protecting that profit or that capital, you're fine. So I wouldn't worry about, is it going to keep going up? You just stay with it while it is going up. Now, what you're suggesting is maybe take some capital off the table, maybe original capital off the table.
Yeah, I think what's important is once you get in, you have to ask the question, okay, at what point do I think this stock's going to reverse? And if it does reverse, where is it likely to fall back to? That's always the question.
Yeah, but assuming, with the way Dino's written his email, is assuming he doesn't have a lot of knowledge. So at what point, so to do what you're asking, he needs to have a lot more knowledge.
Yeah.
He needs to be a good analyst and understanding stock price and what we teach in our courses.
Yeah.
But right now, what can he do?
Yeah, so right now I would say, looking at the scenario of this chart right here, the evidence says if it does continue to fall back, well, the first port of call is somewhere down to that 23.5 cents. Work out if it does do that, how much am I willing to give up from my profit relative to my buy price?
Okay.
If it falls further than that, obviously you've got to make decisions about how much you want to keep. But right now it's failed at that previous all-time high. So maybe there's reason to take the initial investment off the table, take some partials, leave half in there, and let the market play with the rest of the money. But
Would you stay with it?
If it fails, if it continues to fail here, I would be asking the question, if I sold today, how much profit am I going to make relative to if the worst case scenario is it comes back down to this momentum through here or worse.
Okay.
And then I can weigh up those numbers and go, okay, I'll make a decision here.
Right. Hopefully that all makes sense for you, Dino, and I really do wish you good luck on this stock. It looks like a real ripper at the moment. Anyway, Paul's email is next, and he says, I bought Medibank Private in the past runner and sold in September last year. I've been waiting for time to buy back in. The price has stayed above the weekly trend line, and there have been a couple of chances to buy back in, but I missed the buy. What are your thoughts on buying in on a pullback, and where might it go? Janine.
Really good one. Medibank. Interesting stock choice. Okay, I think this is the best I've ever seen of this stock. Just looking at the history, it's been a really good trading stock, and then dump it and walk away and never touch it for ages, and then trade it. You know, look at these nice little opportunities along here. But this was actually the best one here that you took. So congratulations. But do you have to take every run? And the answer is no. I mean, the thing is to really be in the ones that are great. So congratulate yourself for that, but don't keep looking at the stock, sure, but don't think you have to be in that run. So what? You missed it? That's fine. Will there be another opportunity? I think there will. But it might take out this high before you actually get a decent pullback to justify taking it, because right now it's so close to that high that I just think it's too close. It's too tight for me to be looking at that. I think wait for a pullback, see if it actually breaks the angle of that trend. You're right that there's a bit of a trend happening up there. Looking at that, it's really tight. So it could just keep going straight through it and then reverse when it gets through that high. And that's the risk in trying to take it right here. And unless you've done analysis to prove to yourself otherwise, I would just say, well, for now, I'm just going to steer clear and watch it.
Who's asking does he buy in on a pullback? Buy on a pullback.
Well, it depends how big the pullback is. You know, I'd want to see the pullback come back something to the order of around, that sort of maybe 7 or 8%, say 7%. If it comes back to around that, and then it's got a nice sideways move, a nice setup back through this level again, then possibly, because it will have tested that rise to show that the sellers are gone and the buyers are back in again. So at the moment, it's just buyers, and we don't know what the sellers are doing, and so that's where the risk is.
Yeah, because do I buy on a pullback, and where do you think it's going to go? Because the first question has to be answered first before we even get to the second one.
Yeah.
Because depending on how far that pullback is, will determine what your answer would be.
I think you just have to sort of look at it and say, right, I missed it, because if you looked at where the trade could have been and the stock's already risen 8%, and so you were thinking that the stock could go through that all-time high, and there's a chance that it could go up to around that 5. Hang on, where am I? It could end up somewhere around here. So the 20% was the potential upside. You've already done half of it. Right, essentially, right. So now you're saying if my risk is 10 to 15% or 8%, let's say 10%, then I'm only going to make another 10% to get there. And that's really what Phil was saying before about the $10 thing. If it's going to cost you $10 and you're only going to make $10, is it worth doing it? And can you find a better opportunity? And I think that's really the answer for him.
Find a better opportunity?
Yeah, but keep an eye on it, because if you eventually get the pullback, and then it might go through that high and then come back and find support somewhere below the high, and then give it evidence that it's got further to rise, then we would reassess our analysis, do an update where we see the upside potential from there. But it's got the potential to even go above $6, but that's after we see the next pullback. It might only get for $5.60. That's the risk.
Yeah, cool. Anyway, well, let's move on to the next one. Henry is next, and he writes, I'm looking at Cochlear, and I'm a little unsure how to interpret the recent price action. I was expecting the stock to continue falling and was waiting for it to reach around the $80 level before considering a buying opportunity. However, the recent rally has made me question whether the correction may be already over. Do you think this is just a temporary bounce and the stock could still head towards the $80 mark? Or do you believe the correction is complete and Cochlear is now setting up for its next higher move? Really, it's one I've been watching myself for quite a while, actually, because I've been waiting for it. And I was actually waiting for it to find support around the level that it's at now. But I'm going to let you answer all this, Phil.
Yeah. All right. Well, I think best thing to look is big picture first if we're going to look at Cochlear, and that's the monthly chart. And right now, I mean, it's great. It's found some buying. It's starting to tick up, but we want to see what sellers do next, because if you're a short-term trader, I would say go for it. Take the opportunity that's there, and there was a really good risk-reward opportunity.
It was.
I mean, again, just by watching.
I didn't take it, by the way. I just.
Yeah. Well, I had some guys that I was mentoring that actually took this.
Oh, good.
And they're
I was
already
too
up.
busy, and I thought I didn't have enough time to manage it.
Yeah, but you look at that, fallen back to long-term trend, really nice opportunity on a short-term gradient. If I'm looking bigger picture, and somebody who wants to be, trade with more confirmation, maybe this is for a medium to long-term portfolio.
It doesn't say.
Yeah, it'd be nice to know. But right now we want to see what the sellers do, because we've only seen really strong selling, a little bit of buying. You look through these previous periods, the dynamics are still bear market. So we're going to find out very soon. That's the best thing. If we see some more buying come through and then the sellers fail and hold this April low, that's a good time to start getting excited big picture. So right now the biggest time frame isn't giving us that confirmation. Someone who's short to medium term, I mean, really nice volume coming through at these levels. That's nice. We've seen more up weeks than we've seen literally since 2025 in May. So it is promising, but a little bit more confirmation would be nice.
But you're so right in what you actually just said. It's interesting because if a stock's bearish, and this is absolutely proven it's bearish, it hasn't proven it's bullish, so you must assume that it's going to continue to be bearish until it's not. And at what point isn't it bearish? But often when you see a stock falling for this many years and this deep, that first move out is just going to be what they call a dead cat bounce. Quite often it'll just go up and come back down to near where it was again. That's the safest place to buy, and that could be 6 months away, it could be 7 or 8 months away, we don't know. So you're going to have a time. So that's what Phil's saying is now, obviously, as short-term traders, you get in and make a little bit of a quick buck, which some of them have already done that. But I wouldn't be too stressed about it at the moment. I'd just watch it a little bit, because until it proves it's going up, from being obviously longer-term moving up, then you don't need to be too worried about it. I think, it's a great stock. And as I said, I'm watching it for my super fund. And I will buy it when it does give me a signal that it's moving up. I'm just sitting back and waiting at the moment, because it'll be a good trade when it does go. But you want to add anything, Janelle? I saw you nodding your head there.
I think that you guys said it all.
We said it all.
Another top 20 stock.
Another top 20 stock, absolutely. And that's what I said earlier, it's really good. But one thing I want to just bring up before we move on to your hot stock tip, Phil, is often we get comments of people saying, well, why didn't you comment on this that did an announcement and it does this and it does that? And you sort of touched on it before with that other question that you're asking, is like if it's doing this or if it's going to do that, all this fundamental stuff. And I see people put it on to, put comments onto our YouTube channel with, well, here's all these fundamentals. This is a technical analysis show. We're technical analysts. We don't really get a lot into the deep fundamentals. We do look at some of the metrics like EPS, dividend yields, PE ratios, but we don't get a lot deep into it. But so many people watching this show expect us to get deep into the fundamentals and talk about all of that, and we don't. So please don't expect us to do that. But the chart will tell us everything that we need, and that's really what we do in here. We're experts at looking at the charts and looking at direction, looking at strength, and planning out that white space on the right. We look at the right-hand side of the chart and there might be no bars there, but we know what's going to happen with a high probability. So, and to me, these guys sitting with me, including and Pedro, who you see all the time as well, we're all experts at this sort of stuff. But anyway, let's get into Phil's hot stock tip.
All right, let's go. Now, the hot stock tip this week is Mesoblast Limited. Now, before we get to the chart, check out this massive news that came out today, where the company has reached a major milestone, successfully treating 300 patients in its pivotal phase 3 back pain trial. Now, the next big catalyst is expected in mid-2027, so watch out for that, when these results could pave the way for FDA approval of a potential blockbuster therapy. Now, we're going to get into the chart right now, but this is one of those ones where we're on the doorstep of getting some really, really big changes. So looking at the chart right now, I mean, let's bring up the monthly. Obviously, yeah, interesting.
Now I know why you've got it on.
Very interesting. And oftentimes this is the moment, right? When they, because right now what's operationally, it's a good result. When they do these trials, the first phase is get the number of people in there and get through the trial. Then the next phase is like, okay, let's see the result. Was it a good result? Has the, whatever it is, drug worked or whatever the case may be? But at least we got the first tick now. And once you get the first tick, that's often when the smart money goes, okay, let me see how we're looking.
But that's sort of what Henry was saying with Cochlear. Like he was looking at it, and I think it's fantastic that Henry was looking at Cochlear. I think that's brilliant because everybody else is not. You know, and Mesoblast is probably, you look at the chart, people haven't been looking at that stock. And that's why I went, wow, now's the time to look at it.
And that's why the price action is going to tell you everything you need to know about what may come. Because regardless of what we may think, whether it's a good, bad, indifferent result, if there's money being poured in, it's being poured in for a reason.
Yes.
And the best way to manage that is what you're seeing in terms of price. It cannot lie. It's unbiased. If someone's buying, they're buying. And going back to that chart, that's what we're seeing right now. The news came out. We've seen a pop-up, a little bit of selling come through short term, but it's really interesting. We've broken out of this huge period of sideways congestion. And I'll just go back to that monthly chart. So the news has been taken well. We're coming out of really huge levels in terms of where this stock has gravitated towards for a very long time. And now we're on the flip side of that. We struggled all through that period. Basically, once we got on top back in 2010, that was the run. When we got on top in 2020, that was a really nice run. We're on top now when we're on top for a while. We've found it in 25. We've consolidated here. And right now, I think that next initial marker is this short-term resistance at around 333. That's where it's looking like we're getting to next in the short term. If we can break through this, boy, we can get a good chance at 540, 550. So
you're freaking making my job harder, aren't you? Because it's like, seriously, I'm going to run out of money over the next 4 weeks. Now I've got another stock I'm going to have to look at.
Yeah. And that's, again, the beautiful thing about looking at the market in today's lens and what's being spoken about, how bad things are. So, well, hang on a second, there are these opportunities, you might not get them for another 10 years.
Yeah.
You maybe won't.